And if you didn't take a partial, or if I don't indicate there was a partial to be taken, which isn't going to happen because at 5 handles you're taking it, this whole time investment will feel like a waste if you've done nothing but get break even, which is the actual lesson in that. You need to take partials. If I'm teaching you, your threshold should be aiming for 5 handles. Doesn't it go without saying, if you're watching something, if it goes to 5 handles, you should do what? Initially, square the position off right there at 5 handles. And just watch, does it go beyond 5 handles? And you're going to feel all this impulsive behavior start to well up inside you. Oh, I shouldn't have done that. If you're trading with a live account, following along in the commentaries I'm going to do in live streaming, you're going to feel like, oh no, I shouldn't have listened to ICT, that fucker. He told me to get out of 5 handles. Look at it, it's already 30 handles. What did you learn there? Greed. And it's going to build in the building blocks of fear of missing out on that next big rip. Instead of just saying, I was looking for 5, it gave me 5, I moved to the sidelines, and now I'm going off to go spend time with my kids, go watch a movie, I'm outside, I'm doing whatever I want to do, take a drive in my car. I'm on vacation. I got this one in and nobody knew about it. It's done. I'm not condoning vacation trading, by the way. Every time I do it, I hate it because it ends up coming hours and hours and hours in front of the charts. And then my wife says, you weren't supposed to bring that. You said you weren't going to. I know, I'm sorry. That's like that analogy, the wandering eye. These charts, I'm sorry, they're all beautiful. And I live a monogamous life, but as a trader, my eye, it just lingers. Okay. And in the charts, I'm going to see a hottie. Okay. I don't see numbers and candles anymore. I just see a brunette, a blonde, a redhead. No, I'm just saying. I'm just being funny right now. My wife is the only one for me. The wandering eye scenario will get you hurt in trading. Okay, so I want to make sure that you all go in with the right expectation, the mindset, the focus. And by doing it this way, it's going to be boring in the beginning. But once you see how we can see these things panning out every single time, it's the same fucking shit. It becomes entertaining. It's almost like the book you've read multiple times. You know the plot, you know the character engagements, and you know how it's going to end. Now, that same book that you read over and over and over again, you give it to your kid, or your dog gets a hold of it, chews it up, rips a couple pages out, or spills coffee on it, and you can't read a certain paragraph. Do you lose resolution if you go through that book and can't read that 1 or 2 paragraphs? You lose a little bit, but you're familiar. You still know what is likely to occur. You've been there before. It's kind of like a hologram, okay? A hologram and how I'm going into a scientific. Well, I'll just go there. A hologram is an image that's formed with a capacity that allows for some things taken from it, and you'll still see it. You might lose a little bit of resolution, but you can still see it. Versus only being able to see black and white binary only. That's not what this is. Because you're going to be able to see more than just one setup, which makes you much more effective as a trader. See, if you're following a logic, like most retail things are, you're looking for this one pattern. You're looking for this one setup in this indicator. When it's oversold, you're trying to buy it. When it's overbought, you're trying to sell short. If the moving averages are pointing down, you're trying to go short. When an overbought reading happens in your indicator, that really confirms that it's probably time to sell. By that logic, once that pans out, and say the market starts to drop a little bit, and it leaves the overbought condition, and you're between overbought and oversold, you're in that area where, hey, you're between setups. That was one of the frustrating things I had when I was using retail stuff and fumbling. Only when the market was going parabolically up, I felt that it was working, because I only used a 50-day moving average on the daily chart for my bias. If it was sloping up, I wanted to focus on being long. And then I used an hourly stochastics, slow stochastics, and I looked for type 1 bullish divergence, which is the classic lower low in price and a higher low in stochastics while it's oversold. Once the K and D crossed on the stochastic, that line, Once that occurred, then I would go in the next day and I would buy strength at the open. And that's how I was trading. That was it. There was nothing to it more than that. Now, I was teaching people like I had figured out, how to end world hunger. This is to fix everything. And some of my students back from the 90s on America Online are actually still in this community here. Hi, Ray and Steve Michael Garner. The folks that have watched me evolve as a educator and as a mentor know full well the difference between today and how it was when I was just discovering how money can be made. But I can tell you, as a 50-year-old looking back, those instances, I really didn't know anything. Like, I didn't know anything. And I translated market success on just a whim. It just happened. Okay, it was coincidence that I happened to be long in a time when the market was going up. And I didn't understand it was going up because it was no way for it to do anything but that at the time. Everything was in a commercial bull market. It was just parabolic. Everything was just straight up. So anybody buying anything could have made money then. And that, to me, looking back, was very painful as a young man, because I was wanting it so badly to be skilled when it was just happenstance. Whereas now I can talk to you in wisdom and know that was not wisdom then. That was pure and absolute luck. Whereas now, today, I have something that's measurable, it's transferable, and other people are doing it, and they're making real money with it, not just market replay or paper trading or demo. They're really realizing profitable results, and they're handling that and spending it and doing whatever they want to do with it, as they should. But as a retail trader, if you're focused on whatever it is that they're teaching with retail, once that trade scenario starts, they train you to do what? Well, if you didn't take the trade, let it go and wait for the next trade setup. Well, what if it means that you have to wait for that crossing of the moving averages and they got to be sloping down, and then you got to wait for another overbought scenario to go short? That's a whole lot of wasted fucking time for me. Like, I couldn't tolerate that. So one of the things that became a transition for me out of retail stuff is that even though if I was thinking that if the market was bearish, whatever market I was trading, and I was using a 50-day moving average to give me my bias, and then on the lower time frames, 4 hour and 1 hour, I would use a 10 and 20 moving average, exponential moving average. And if they were both pointing down and stacking, in other words, they're separating and pointing down both directions. If the daily at a 50-day moving average that was going down too, that to me was a very, very strong bearish bias. Then if I waited for an hourly overbought, that would get me in sync with a move that had already happened on a higher time frame, where other traders that using that logic wouldn't even consider it. So what did I start doing without really knowing what I was doing? I was taking the fractal nature of price and breaking down a larger move into smaller moves that repeat the same way. So some of you are in here listening to me and you don't trade like I do. You have a lot of retail indicators and you have logic that are found in books, and you still make money. God bless you. I'm not saying anything about you not being able to make money. I'm just saying the things I'm going to show you about price are going to help you ferret out the winners in your system right now. And you're going to understand why they're winning. And you're going to understand how your system is losing when it does, and how you can reduce that effect and minimize it, which is, again, all I'm trying to do is help you. There's no sales pitch. Okay. I'm doing this because I love doing it. I love teaching. I love sharing this stuff with you. I love seeing you run with it and do well with it. And it motivates me. It keeps me going. It's my entire life. Okay. But if I can drop down into a bearish model like that using any other retail logic, it started this whole mindset. Okay, if I am really thinking that this is the only time trades are occurring when this retail trader model is saying it's a sell, what's going on when the indicator that I'm using for overbought and oversold, who's buying and selling when it's in between overbought and oversold? So I started mining that, going in there and studying price action in those periods. And then I discovered that between overbought and oversold, there was these little micro gaps, fair value gaps. That's where I got the whole term. That's why I gave you the logic and taught you that, okay? In between the best entry and the exit of the best case scenario, your mindset should be thinking, okay, the market's going to be reaching for something. And then the retail model was once it gets oversold and diverges bullishly. That was my exit strategy. Once I became a trader that could sell short, which took a very long time because it didn't make any sense for me to be able to sell something I don't have. Short selling was weird to me. But my counter trade, or the way I would kill a trade, is if I'm short, I would use a divergence that would be bearish, and then I would look for a price to go lower the next trading day at the opening. I would look for a price below the opening price, and then boom, once it traded down to that price, the weakness of going below the opening price would get me in. And then I would do 2 times whatever the highest high from the entry point, whatever that amount of movement would be. That's where my stop loss would be. That's how I did it when I was trading with the job, when I was going around filling vending machines, driving all around Baltimore, in and out of places all the time, using a quote track machine, looked like a transistor radio duct taped to my work truck windshield. Chart books laying piled up next to me in my lunchbox. I was a crazy ass looking freak. Like, I mean, I'm running around. I got charts rolled up in my back pocket, and I got quote track next to me while I'm filling candy machines up. Okay, I'm putting candy bars. You know, when you go to a hospital, put your dollar on there. Or you can't get a candy bar for $1 now, but back when I was doing it, it was 45 cents a candy bar, 50 cents a candy bar, 50 cents for a can of soda. So I'm filling this vending machine, and I got my quote track laying in the empty column that I haven't put Twix in, or Hershey bars in, or potato chips in. Okay, so I'm watching price, and I'm looking at it. I'm saying, okay, all right, it should be filling me right now. On my stop order, I should be short right now on soybeans. So you don't have to be in here watching real-time data. You don't have to be day trading. If you're going to learn how to do this, and you know that you can't be an intraday trader, and you need to trade on higher time frame trading ideas, I'm going to teach you how to do that this year too. But back to the development of fair value gaps. When I was looking at the range between a price run that would be bearish, between the actual entry that would be ideal, I may or may not been able to participate in that move. And that was a very great deal of stress and anxiety and frustration for me, because if I missed something, if I didn't have the prowess to observe it before it formed and then it started breaking down, I would feel like I'm going to miss that move. Once it starts moving, and you probably feel this is the same way when you see me talk about a move, or I've highlighted certain things, or maybe you just found it on your own, and there's nothing wrong with that. That's great. The market starts to move. You know where it's likely to go. You know what it's reaching for. There's an equal high, there's a single high up there, or it's going to a fair value gap that's above the marketplace. You know, in your heart of hearts, in your gut, you know exactly that son of a bitch is going right up there, but it's already started moving. So what do? Plunge in there with a demo, buy it right there, or sell it if you think it's going down. But then what happens is you're now, in your mind, you're saying, I don't care if it comes down against me because it's a demo, it can't hurt me. But if it goes up there, fuck yeah, I was right. Look at that. Woo, video game trading. What are you teaching yourself? Don't worry about the loss because it can't hurt you because you're in a demo. But feel good about the transaction if it goes up there because you're right. Now stop and think about that for a second, folks. You're doing everything wrong. You're teaching yourself not to respect the risk. That's the paramount issue when you go into trading. You have to have a stop. You have to know why you're putting a stop there and how much are you risking. Some of you are just doing the simple average 50 contracts or 50 lots on your trades when you're trading gold. You're not trading no 50 contracts of gold. And you're not adding every time it goes up 2 points. You see the MT4 guys that they got 30 trades of the same market, and their only difference and price entry is 1 or 2 points. And they're showing you their $50,000, their $60,000, $70,000 wins, all stacked up. I have never liked a post like that. You didn't take that trade. That's not a real trade. That's just you seeing what will happen if you did that. And you're getting drunk on math. And that's dumb. When you're looking at a market move that you think is going to go to a specific price level and it's already started, you wait for a smaller time frame fair value gap. When it trades down into that, then you can engage it. When it starts running, observe it from that point on. But you have to know where the stop loss will be, and that is below the fair value gap. So when I started breaking down the market like that, I said, okay, soybeans started taking off. I missed the move. Live cattle. These are all commodity markets, by the way. You're probably thinking, what the hell is he talking about, soybeans and live cattle? I was a commodity trader when I first started. So when I started to trade in the bond market, the 30-year treasury bond, and when I was trading the S&P futures contract, I would see these movements after the fact sometimes. And I would feel like I got to rush to get in there. And I missed it. So my focus took me into studying how I could engage a move that already started. Because my tendency is, tell me something that you can't do, and I'll find you a dozen fucking ways where I can do it better than you could ever imagine. Because I have a chip on my shoulder, and I'm obsessively compulsive. And a grandmother that no longer lives anymore told me something that scarred me. Said I was lazy when I wasn't lazy. I was fucking tired. And she was expecting me to do something that was beyond my capability as a 11-year-old kid. So when I had her tell me I was lazy, honey, you're lazy, I was like, you said what? So that's why you see me work the way I do. My work ethic in everything I fucking do is off the charts. I always over deliver. I always do that because nobody's saying I'm fucking lazy. I can tell you you're lazy. I can say that to you because if you're not putting in hours each week, if you're not making dozens of pages of notes each week, not 5 little lines on a page and scribble and say, oh, I did the work, here's my notes. That's fucking bullshit. That's comic strips. Okay? That's what that is. You're wasting time. People that want to learn how to do this, they're going to pour themselves into this and they're going to get what they're looking for and find more than they were looking for. So I had to go in and figure out how to compensate and build and develop a coping skill for this fear of missing out. See, you have no idea what the fuck you're doing, but you want to go in there with a funded account or a live account and try to make something happen, ignoring the risks, not really understanding the detrimental barriers, obstacles, impossibilities that you're building these walls in front of you by doing it incorrectly. They're going to weigh on you heavily, mentally. You're going to see them as they're just too much for me to get through because you're doing it wrong. So I'm not saying I'm smart, okay? A lot of prayer went into this. A lot of prayer. And you can be an atheist. You can believe whatever you want to believe. I'm telling you, this is how I got here. When I looked at moves and I couldn't get myself to accept the fact that I wasn't smart enough in my early days to see that move before it started, and you had a big down day, I knew at that moment it's going to go down to this level here on the daily chart.